Hey everyone, and thanks for jumping back into the Cryptoverse. Today, we're going to talk about Bitcoin, and we're going to be providing an update to the bull market support band. If you guys like the content, make sure you subscribe to the channel, give the video a thumbs up, and check out the sale on Into the Cryptoverse Premium at intothecryptoverse.com. We do have several different tiers available, one of which is free. Make sure you check it out. Link is in the description below. That sale's ending today. Let's go ahead and jump in. Now, we have often spoken about the bull market support band. Of course, we talk about it a lot more frequently in a bull market as opposed to a bear market. And as we've said many times, it's probably better off thought of as a bear market resistance band in a bear market, or as I saw someone put it recently, the bear market recession band, right? Of course, there is no guarantee that we get a recession, but there is that outlying risk that it does in fact occur based on the inversion of the yield curve and recession probabilities and all these things we've spoken about on the channel. Now, one of the reasons why I like this resistance band or support band is because it actually does a pretty good job of just outlining whether we're in a bull market or whether we're in a bear market, right? And it's also one of those things that had you essentially just used this for a lot of this, for a lot of the last year, it would have done a fairly good job of informing you that the bear market was in fact not over. Now, there was one time we broke above it, but we actually talked extensively about that breakout and said that if you see no follow through on this and we just resolve to the downside within the next 1 to 2 weeks, then it just simply is a false breakout. And we've had those before. So when you get above it, you need to see follow through, right? And we did not get that back over here in April. And if you remember, one of the things we talked a lot about back then was, the idea of putting in higher lows and ultimately just simply getting rejected off the 200-day SMA, right? And the reason we talked about it back then was because it was a very similar pattern as to what we saw in 2018, right? It was like a low, a higher low, a rejection off the 200-day SMA, and then a failure to put in a higher low, and then we resolved to the downside into the range that took us from June until November, right? So the June marked this local low, which of course a lot of people put a lot of their they put a lot of credibility on this being the actual cycle bottom, when we said many times that it typically, what typically happens in the summer is that a lot of people think it's the bottom, and a lot of people will sort of rally into the altcoin market in the third quarter of the year, but oftentimes it still resolves to the downside, and you can see that it resolved to the downside here in November. And in the same way, we had a very similar pattern, right? I mean, you had the low, the higher low, the rejection off the 200-day, and then the failure to put in a higher low, and then a resolution to the downside. And then at this point, we eventually came down into June, and then it ended up being our base until when? Until mid-November, right? Until sometime in early to mid-November. And then we broke below. Very similar, right? Very, very similar outline, in both bear markets. And so I do think there is some validity to using the 200-day SMA in addition to the bull market support band. So we're going to talk a little bit about that later, but the 200-day SMA is, I think, a really great tool to use, especially in a bear market. In a bull market, we can often just spend a long time well above it, and it's not necessarily that informative. But in a bear market, it actually is quite useful, right? You'll see these rejections off of it, and you actually saw more rejections off of it when you look at like the entire market as a whole. Like if you look at the total crypto market cap, you'll see us coming up closer to that 200-day. If you look at, say, like total 3, which is the altcoin market, you'll see something similar, right? Just these rejections off of the 200-day SMA. So then what I want to talk about now is going back to where Bitcoin currently is. So right now, Bitcoin's trading for, just below $17.4 thousand. We have been slowly moving up over the past couple of months from November. Okay, the main difference so far, I suppose, from this breakdown and this one is that clearly this one was a lot more significant in 2018, right? So we have to at least be somewhat cognizant of that. This rally, this 4x rally that came after it was also partially fueled by a 53% drop, 52 to 53% drop. But this time, at least so far, this drop has only been about like 24, 25%. Like it hasn't been nearly as significant as to what we saw back in 2018. So we need to keep that in mind as we continue to navigate this. Furthermore, back over here, we were holding support at the 200 week, which is interesting because now we're of course well below it. But if you pull back up that bull market support band, you'll note that the current range on it is 18,342 to 19,110. So, I mean, this is the line in the sand, right? I mean, the line in the sand is constantly changing. And of course, using something like this, essentially it allows you to sort of figure out what is the likelihood we're in a bull market or what is the likelihood we're in a bear market at any given time. Now, of course, everyone always wants to discuss the idea of is the bottom in or not. This was a very popular topic back in the summer. And, a lot of people were wanting me to call the bottom, right? And say that was it. But we know that history shows us that it was unlikely to be the bottom. And furthermore, as long as we stayed below this resistance band, the market was still not showing any sustained strength. So by calling the bottom prematurely, you end up running the risk of just seeing simply another rejection by the same resistance band that's been rejecting us for the entire bear market, right? So it's important to know, where those levels are, because the thing is whenever we do break above it, and we'll break above it at some point. I mean, I imagine at some point in 2023, in fact, we will likely break above this resistance band, right? At some point this year, I think we'll break above it. But you must also remember that whenever we do break above it, it typically is not an indication that a massive bull market is about to start. It typically, you can see back over here in 2015, once we broke above it, you can actually see we got rejected from it in early 2015, right? So we actually rallied up to it in March of 2015, and then we got rejected by it, and we actually came back down. And then we rallied above it in the summer, and then we came back down and put in a sort of like a double bottom, and on some exchanges actually went to a new low. Right? So something to consider is even if you get above it, it doesn't mean that the bull market's here. What you need to see is you actually need to see some type of support being held on it, right? That's what you really ideally want to see is holding that bull market support band as support. But it's a very long process, right? You go through being rejected by it throughout the bear market. At some point, you break above it, but whenever you break above it, we typically then, it's like a false breakout. We spend maybe a few weeks above it or even a few months above it, like in 2019, and we come back down and maybe put in a double bottom. So it is a long process whenever you break above it, but it is at least something to keep in mind, okay? And that's where the current range is, right? It's from 18.3 to 19.1. Fairly tight range, right? It's a fairly tight range. It's not that far from where we currently are. And if you remember back in November, a lot of people got excited once again, right? And we're calling for, I don't know if you guys remember this, or a lot of people were calling for rallies right back up. And then what happened, right? We rallied up to the 20 week and then we got rejected, right? Now, of course, you could point to the fallout of FTX as the reason for that rejection. And I'm not saying that you're necessarily wrong. You can call it whatever you want, right? But at the end of the day, all that really matters is that it broke down. Right. I mean, your bank account doesn't really care about what the narrative is. You can't put narratives in the bank account, right? It's just, what's in the bank account based on the actual cash value. And it got rejected. And you could argue, though, sort of say like the realist would just simply say, well, the Fed raising interest rates is likely going to expose zombie companies. So it's only a matter of time before these companies are exposed and they ultimately fall, and it puts downward pressure on the price, right? So, I mean, you can call it whatever you want, but this is often a likely outcome of quantitative tightening. The zombie companies are brought to the surface, they're expelled from the market, and then the market is usually much better off for it. Okay, so right now, again, that range is that 18 to 19K range. Now, if you look at this on some other time frames, let's go over to the daily time frame. If you take a look at the 200-day, which we know is what rejected us back in March of 2022, that's actually a little bit higher than the bull market support band. And the reason we need to remember that is because, remember, back in March of 2022, we actually rallied above the 20-week, and then we still just got rejected by the 200-day, right? And you can see there's a fairly similar, fairly similar structure here. That's not to say that the outcome has to be the same, but where if you do rally above the 20-week, there's still the 200-day sitting just above it. And the 200-day on Bitcoin is actually at 19.5, so 19.5K. So it's actually just a little bit above it. Now, the other thing I wanted to mention are some, some of these trend lines that we talk about. And listen, I mean, I don't honestly put a ton of weight into trend lines because we know how easy they can be taken out. We know how sometimes it might seem like we're going to rally to it and then it doesn't happen. A great example of that actually is the comparison of 2018 to 2022. We talked about, this low, the higher low, the higher low, this rejection off the 200-day. And then once this low was taken out, we actually rallied back up to the trend line, sort of back test it, right? We back tested that trend line. And then in 2022, I thought that could be a potential outcome, but it didn't happen, right? Like we sort of rallied back up a little bit, but we didn't even come close to sort of testing that same level. So if we had, Bitcoin would have had to rally all the way back up to like $40,000 over here, which would have been somewhat akin to the rally, back to 8,500 or so back in August 2018. But it didn't happen, right? And we ultimately just continued to break down. So of course, I don't think it's worthwhile to attempt to take these trend lines to the bank, of course. But if you were to look at some of these potential trend lines here in the short term, one of course is just simply one we've already back tested. So that one did sort of work out, right? So perhaps it didn't work out over here, right? We didn't really back test that one. We did back test this one at around 18.3 or 18.4. I don't remember exactly what it was, but it was somewhere around that level. If we take a look at the wick here, around 18.4, 18,376. Of course, it's going to depend on the exchange you use. So if we were to back test that trend line again, then you're talking about it going up to that 18.5, 18.6 level. It could go higher depending on how long it takes it. But furthermore, it would also correspond to that bear market resistance band, right? Which is an important level to look at. You can see that resistance band here is coming into that same level. Now, the 200-day again sits just above it. And so perhaps some other trend lines to look at would be, this downward sloping trend line, which also finds, some confluence here at this level. And that level is around 18.5, 18.6. So it actually, if it actually goes back up to this trend line, it could potentially take out this local high from December. Okay. Just if it were to rally back up to this trend line, or if it were to rally back up to the downtrend line, which still would theoretically give it a little bit more room. Now we do have, I would argue, potentially a high volatility event coming, as you guys know, or if you're not aware, right, is of course the CPI numbers that are going to be coming in tomorrow. So if inflation, surprises a lot in either direction, I imagine it will be a fairly high volatility event. Like if it surprises to the downside, you could see risk assets rally in the short term, right? I mean, there's nothing precluding risk assets from rallying per se in the short term. Even if you do have recessionary fears over the next 6 to 12 months, doesn't mean you can't have, short-term rallies to the upside. It's perfectly normal, and we had no shortage of short-term rallies throughout 2022. I mean, we had a lot of them. So we always must contend with that as being a potential possibility. So if inflation comes in soft, then you could see that. If inflation comes in very hot, then I imagine that the reverse of that would be true, and you actually would probably see a short-term pullback on risk assets, because then the market is likely going to have to price in more rate hikes by the Federal Reserve than they're already pricing in. What they're pricing in right now, I believe, is a 25 basis point rate hike in February, and then another 25 basis point rate hike at the meeting after that, and then likely pausing somewhere around there, maybe at 5% or at 5.25% is, I think, what markets are pricing in. But if inflation surprises to the upside, and we go back to some higher numbers, and I risk assets could of course take a hit in the short term without necessarily rallying back up to these prior levels. But again, that is sort of the line in the sand. And then the other way, if you're trying to look at this as many ways as possible, we've talked about this a little bit, and it's that time-based capitulation component, and the in general, it's the idea in a lot of these bear markets, right? As difficult as it might be, we actually spend a lot of time, probably a lot more time, in fact, going up than going down. And we've had plenty of these sort of bear flags that ultimately just simply resolve to the downside. No shortage of them. And unfortunately, they've just sort of continued to resolve to the downside. And there's been plenty more up here. And if you were to draw one, in the current range and just try to estimate what that range currently is, and you were to look at it like this, you could argue that the current flag that Bitcoin is in, maybe if I would try to get this a little bit more on point there, you could argue that the flag that it's currently in has sort of like a lower bound right now at around 16.5, 16.6 for us to stay in it. So if like we were to go below those levels, then that means the flag is breaking down, just like it broke down, like over here and over here. So that 16.5, 16.6 would be the sort of like the line in the sand. So, if it rolls back over and comes back down, it doesn't necessarily mean that this has to break anytime soon. We could then still rally back up in a later month. But then the top part of this range would actually take you all the way up to over $19,000, which is actually corresponding to that 200-day, right? So the 200-day is sort of kind of coming up here to close to the top of this, to this flag, right? So if Bitcoin were to rally back up, and again, for it to rally back up to that level, it would actually have to take out, this, right? It'd have to take out this trend line. So for Bitcoin to actually rally back up to the top of this flag, it would have to take out this trend line. But again, that's all the way up at, the trend line is all the way up at just below $19,000. And the 200-day is just above it, right? So the 200-day is at around 19.5K, right? So about $2,000 higher than the current price. And remember, on CPI days, you often get a lot of volatility, and it can go up really quickly, it can go down really quickly. So just be somewhat cognizant of that, right? And be aware that these moves can occur very, very quickly, and then they can, you could come back down very, very quickly as well, right? Like if it were to resolve here to the upside and Bitcoin were to get a pump, it doesn't mean that it won't just come back down and retest some of these levels before ultimately deciding which way it wants to head. But hopefully this is at least a somewhat informative about short-term price implications for Bitcoin. As you guys know, I don't really put a whole lot of weight into short-term predictions, but I did want to at least provide some commentary on the most recent price action by Bitcoin. You can see that it's been slowly trending higher. If you were to look at the daily time frame, in fact, we talked about Heikin-Ashi candles before. If you were to just sort of overlay the 200-day and pull up the Heikin-Ashi daily candles, you can see that it's actually been in a fairly strong uptrend, really since the beginning of the year, right? January 2nd is when it turned green, and ever since then, this has been a fairly strong trend. This is, basically like 10 in a row, right? It says 9, so that means one more because it's taking the difference. So you essentially have these 10 daily candles in a row that are all green when you look at the Heikin-Ashi candle, not just the normal candle. So it has been a fairly strong uptrend recently, and of course it has people sort of speculating on how is this ultimately going to resolve. And so hopefully this has provided some context into what we could look to in the coming weeks. And remember, if it does break to the downside, anything above 16.5, 16.6 is still within this same path. The last thing that I wanted to mention, and perhaps the final way that I'm sort of looking at the price of Bitcoin right now, is looking at this wedge, right? So Bitcoin is arguably in this wedge, and it has been for quite some time. In fact, you could argue that it started back in June. Even though we broke down, this has just simply been like a low and then a high, and then a sort of another lower high. And we also put in some lower lows over here. So if this wedge were to continue to hold up, then you're still looking at needing to get through that 18.6, maybe that 18.7 level before you could argue that this wedge is broken. Otherwise, if we just come back up here and get rejected, and then come back down, then perhaps we have to kick the can down the road a couple months before trying again. But that's ultimately, I think, what is worth following here on the short-term price action for Bitcoin. hopefully it's been somewhat informative for everyone. And thank you guys again for tuning in. Make sure you subscribe, give the video a thumbs up, and again, check out Into the Cryptoverse Premium. We do have the sale going on. It's ending today. One of the tiers is actually free, so make sure you check that out. Links in the description below. I'll see you guys next time. Bye.